I understand.
They are indeed, Kamala. Yes, thank you very much. Now, companies and investors are waiting to see whether US President Donald Trump will impose tariffs on even more Chinese imports on Thursday. That is when a consultation period between the US government and the public ends. And the failure of the US and Canada to reach a trade deal is also weighing on the markets. Now, those concerns have sent Asian stocks lower. Japan's Nikkei 225 lost 2/3%, while stocks in mainland China fell nearly 2/5%. It's a rather more mixed picture in Europe, where the UK's FTSE 100 is up about 0.75%. Germany's DAX is a touch lower, but Italian stocks are up around 2/3% after Fitch kept its ratings on Italian debt unchanged, despite pressure on the government's finances. Meanwhile, global trade concerns are sending the dollar higher against other major currencies, including the British pound and the Japanese yen. Many investors see the dollar as a safe haven as more uncertainty looms over the horizon. And that strengthening dollar is also putting more pressure on emerging market currencies. The Turkish lira is 1.2% weaker against the dollar, but is recovering slightly from the day's low. Turkish consumer prices rose by 17.9% in August. That was faster than estimated. The central bank says it will adjust its monetary policy at its next meeting on September the 13th. So let's stay on the theme of emerging markets for a moment. And to discuss this further is Craig Erlam in London. He's a senior market analyst at trading firm OANDA. Hello there, Craig. Good to see you. Now, the big question, I guess, on a lot of investors' lips is whether the falls that we've seen in the lira and the Argentine peso are affecting other emerging markets. Are we seeing a contagion effect?
We are seeing a slight contagion effect. There are other markets where we are seeing slight drop-offs, and that's not entirely unusual. In times of emerging market stress, whether that's being driven by overall trade or anything else really, people do look at other areas of potential weakness in emerging markets because, as we've seen before, when you do start to see that contagion effect, then the impacts can be quite significant, and people don't want to be the last out of the room in that sense. And what we've seen is other emerging markets, like the Indian rupee, for example, we've seen sell-off, even though the economy there is doing quite well. But because it does have a current account deficit, and that's expected to grow due to rising oil prices with it being a big importer, people do look at that as a potential area for weakness further down the road and don't want to, like I say, be the last one to get out.
Right. Are you seeing, though, something of a vicious cycle emerging where people pull out of emerging markets and into safe havens, quote-unquote, safe havens, possibly like the US dollar, which is causing even more pressure on emerging markets?
Yeah, it does, yeah. So that's exactly what we're seeing, to be quite honest, and I'm not necessarily sure it's not going to continue. We'd like to see some stability naturally, and we'd like to see more of a focus on the areas that are actually weak. And again, you are looking at Argentina here, you are looking at Turkey as well, because of what we're seeing also. But we do tend to see that spread around, and that's unfortunately being exacerbated by the fact that we are seeing a stronger dollar, not just because of the safe haven status, but because it is raising interest rates, and that's typically bullish for the dollar. And again, you're looking at areas of potential weakness in some of these countries where they do have dollar-denominated debt, which is becoming increasingly expensive by the day.
Let's talk about trade for a second. A big decision coming up on Thursday with the Trump administration possibly imposing tariffs on about $200 billion worth of Chinese imports. How much of that is already factored into prices in emerging markets to start off with?
I think a lot of that is already priced in, to be quite honest. It's a story that's been talked about now for some weeks. I think people want to know in what stage it's going to be implemented. The last 50 billion of tariffs, for example, was implemented in 134 billion and then followed up with 16 billion extra. They want to know what that tariff is going to be. The latest that's been touted is 25%, which is up from 10% previously. We need to see how much of that is true. And then we want to see what products they're actually being implemented on, because that will have a knock-on effect as well. You can't just impose tariffs on China and not expect it to impact its own supply chain. And there's a number of countries, particularly in Southeast Asia, that do rely on Chinese exports to drive their own economy.
Craig Erlam, OANDA in London, thank you very much indeed. Now to the other top stories from around the world.